Today I talk to you about how you can save money on capital gains tax when it comes to cryptocurrencies, and I just give you some other hints and tips on how the capital gains tax will work on cryptocurrencies and why the timing of it is so important. And then I talk to you about a special offer I've got on how I can actually help you personally with your cryptocurrency tax. Anyway, let's get into the video. Hello everyone, my name is Ethan Rushock, and on today's video I'm going to be talking to you about cryptocurrencies and again talking about the tax on them and in particular capital gains and why you can save some money when it comes to capital gains just by timing your sales right. And then also I want to talk to you about a special offer I've got when it comes to personally helping you with your crypto tax, so make sure you stay tuned because I will be talking about that later on in this video. And while you're at it, don't forget to check out some of the other videos I've got on my channel about the basics of tax on cryptocurrencies and also about the personal use method, which is a method that potentially could result in you paying no tax on cryptocurrencies. But again, it's a bit more detailed than that, so make sure you check out those videos. I'll link some of them up above. And anyway, let's get into talking about today's topic, which is how can we save money on crypto gains just by adjusting the timings of our sales. So without going into too much detail, but you'll pay tax on cryptocurrencies based on when you sell the cryptocurrency. So as I said, go check out some of those other videos about what that really means. But pretty much it makes the sale date the most important date when it comes to tax on your cryptocurrencies. And so just to quickly touch on, we're talking about for investors here, not for people that are day trading, because that's a whole different thing and the sale date isn't as important. Again, I've got a video, I'll link it up above, but we're just talking about for investors here. So there's two main reasons why the sale date's important, and that's for one, discounts. So the 50% discount. And then also the other thing is to do with which financial year the sale will fall in. So I'll talk about both of those things and why they're important and how you can use them to your advantage. So I'll start with the more simple one, and that's the discounts. So in Australia, if you hold an asset for over the 12 months, you get a 50% discount. So that's clearly very beneficial. So it's really easy to understand because it's just looking at purchase date, sale date, was that more than 12 months? Have you made a gain? Yes, therefore you're eligible for the 50% discount. So let's have a look at a bit of an example here. So we've got a $1,000 gain and we've held it for less than 12 months. So in that situation, the tax on that is going to be $345 and we're assuming an average tax rate of 34.5 cents. And therefore the tax we're going to pay on that will come to that 34.5 cents. So this is no discount because you haven't held for more than 12 months. So now say you're in that same position with the $1,000 gain, but this time you've held it for longer than 12 months. So suddenly that's when this discount method comes in. So with that, you're now getting a 50% discount. So the tax now comes down to $172.50. And so in essence, you're only paying a 17% tax rate on that income that you've made from that gain. So you can see with the discount, that's a lot lower than what you would have paid on employment income or interest income or dividend income because you're getting that discount. So that discount is effectively halving your tax rate in this situation. So when you sell that crypto in a gain position, but you've held it for longer than 12 months, you can see there's a significant advantage there with the discount. Now we'll touch on it, but I'm going to talk about it in more detail, is don't forget the timing of sales just to save on tax is not everything. So I'll go into that in more detail, but just keep that in mind. I'm going to talk about next about the timing of sales and which financial year they fall in, but don't forget to stick around towards the end of the video where I talk to you about what I can actually do to personally help you with crypto tax. Also, make sure you hit that subscribe button if you haven't already, hit the like button and leave a comment down below if you've got any questions. Anyway, let's get back into the video. The next area I want to talk about is the timing of sales when it comes to financial years. So like I said, the capital gain or loss will occur on date of sale. So you can be a little bit clever here on when that sale date occurs as far as which financial year it falls in. So the reason this is important is because you can compare your taxable income in two different financial years and time that sale in the year that it's going to fall best for you. So what I mean by this is if you've got a really high taxable income in this financial year and you're holding a Bitcoin and you know it's gone up a lot of value this year and you're wanting to sell it, but you're going, oh, look, I'm not too fast when I sell. You can have a look and go, okay, because I've got a higher taxable income this year, and you might know next year I'm actually planning on reducing work and traveling. So you could delay that sale until 1st of July, sell then, and that income therefore won't impact you in this financial year. It'll go into next financial year when you know you're already going to have a lower taxable income, and therefore you may pay less tax on this because you'll be taking advantage of some of those lower tax rates. And the same could work in reverse. This year you might have actually taken a year off, you've taken a gap here, but you've been lucky enough that you've made some good gains through your cryptocurrencies, And you might go, you know what, I'm going to recognize some of those gains this year because you might have no other income, for instance. And therefore you want to utilize the tax-free threshold and some of those really low marginal tax rates. And therefore it's better to sell them now than maybe next year when you're going to be going back into employment and working full-time for a full year. The next part of this is to do with actual physically paying tax. So if you sell in June, then you're going to have to include it in that financial year. And that tax will be due depending on your situation, depends on when you lodge, what type of taxpayer you are, your tax lodgement history, if you use an agent, but it's likely to be due between 6 and 12 months later. So you've got between 6 and 12 months to physically pay out the tax on those gains. Now let's look at a situation where you actually sell in July. So all of a sudden, that's not going to be included till the next financial year, and that's not going to be due to lodgement till June the following year. And this is now going to give you that same time period from end of financial year until tax payable, but because you've got that whole financial year still ahead of you, suddenly you're not paying that tax for probably 18 to 24 months. So for those that understand compound interest and returns you could gain in that time, think you've got access to that cash for a lot longer than if you were to sell in June, and therefore you potentially could get some more gains than that, especially in the crypto world. You could make a lot more gains in that time by holding on to your cash longer. You can hold on to your investment longer, or you might reinvest that as such because you've obviously sold your initial investment. You could reinvest that money that you're going to pay on the tax. Now, obviously this is risky. You've got to understand that if your investments plummet, you still need the physical cash to pay for your tax bill, but it does allow you to accrue further gains in that time. And then the third part of this is talking about recognizing capital losses and being smart with when they're recognized versus when you've actually got capital gains. So the thing with a capital loss, it can only be offset against other capital gains. So you can't offset it against other regular income you've got. And therefore the timing of when you have gains and losses is really important, and it definitely can result in you saving on some tax. So the worst situation you want to be in is recognizing a gain in one financial year when you're holding a heap of losses, selling them in the next financial year and having nothing that you can use them against. They can be rolled forward, but you might be in a situation you're never planning on having capital gains in the future, and therefore those losses are useless. So there's kind of two different scenarios here. So you've got the situation where you've already sold something for a loss and you're holding some gains, and so you may want to sell some of them in this financial year to recognize those gains and not have to pay tax on them currently. So that's one option there. The other option is where you've already sold something at a gain and you're holding some losses that you haven't recognized yet. You do have the option to sell these off before the end of financial year, so you've got some losses there that you can offset against those gains. So that is a way that you could save on that. You might have $100,000 of gains, but you're holding a position that's $20,000 down. You're not happy with that position. You're not really wanting to keep it long term. You could sell that and therefore offset that $20,000 against that $100,000. Now it does get a bit more complex here when it comes to discounts and when they apply and when the losses get applied. So make sure you do a bit more research on that. I won't go into it in this topic because that's a bit more advanced, but that is something to keep in mind. Now there is something you've got to be careful here, and it's called wash sales. So do a bit of research on that. But the ATO have got a tax ruling out that pretty much says don't go and sell everything on the 30th of June that's in a loss and rebuy it on the 1st of July because they won't allow that. So if you're just selling purely for a tax avoidance, that's when you're going to run into trouble. It's different if you sell a position because you want to get rid of that position and you don't know when to do it. You can time that and do that in June. That's perfectly fine. But if you're just doing it and then planning on rebuying it back in, and really it looks like the only reason you did it was to save on tax, yep, that's when you're going to get yourself in trouble. And the last thing I want to touch on here is you've really got to consider though, are you just doing something to save on tax? Because if you are, the market moves a lot. So you don't want to hold on to a position too long just so you can save some tax if it's going to result in that position dropping and therefore you're in a worse position. And the same goes the other way, where you can't predict what the market's going to do. Don't make a decision just based on tax. Make it based on a combination of the tax savings as well as what you think the market's going to do. Because you don't want to be stuck holding something, holding it. Well, I've held it for 12 months, but if I had sold 6 months ago, I would have made 3 times the gains. All right, thanks for sticking around for this long. I'm going to now talk to you about what I can do to personally help you with the crypto tax and some of the packages I've actually put together. So for those that aren't aware, I do run an accounting business, Rushock Accounting. And so I'll jump over to the website here and you can see I've actually got a page dedicated to crypto tax with 3 different packages here. So I'll talk you through them a bit. So I've got a bronze package here, which is just a basic crypto tax return. So you'll still calculate all your own gains and stuff like that, and you'll send it through to me and I'll do the rest of your tax return as well as including the cryptocurrency stuff. So I'll include the capital gains if you've received any crypto income, and I'll make sure that what you've calculated looks right and you've got the peace of mind, you're going through a tax agent, you get all the extensions, etc., and you know that it's been looked over. The next is a silver package. So this is the same as what's included in the bronze, but then I also include a tax planning meeting. So this is really valuable because it means we sit down, we have a chat, whether it's over the phone, Zoom, or in person, and we go through what your current taxable position is and what gains you're holding, what losses you might be holding. We do this before the 30th of June, so you've got the ability to potentially make some sales or, like I said, recognize some losses before the 30th of June, depending on what your current taxable income is and what you're thinking it's going to be like for the rest of that year and then the next financial year. And then we've got the gold package, which is, again, includes everything that's in the silver, but then this time you also can consult with me prior to selling stuff about what that would potentially look like. So that might be through the financial year and go, okay, how much tax am I going to pay if I sell that now based on your current incomes? So it's like that tax planning meeting, but it's then utilizing that throughout the year as well. So these packages I've put together, I think they can really help people that are looking for some of that professional advice on it. I can then help you with calculating cryptocurrency gains, or it might be some advice on how you can track some of those cryptocurrency gains and make that utilizing software so it's easier for you, and just any other questions you've got about tax. So make sure you get in touch with me, send me a message via any of my socials, jump on my website, send me an email, and I'd love to help you out with it. For those that do have questions and stuff, and you want to maybe get some of them answered for free, I'm doing a live YouTube video every Wednesday for the next few weeks at least, and it'll be 7:30 Wednesday night South Australian time, so 8 o'clock for the Eastern States, and I'll be answering questions about cryptocurrencies, tax in general, potentially some business content, and really just anything personal finance. So make sure you check that video out. Anyway, thank you for sticking through the video. I really appreciate it, and as I've said, timing of sales can definitely save you some tax, but you've got to consider the other ramifications of delaying a sale or bringing a sale forward, because it's not just all about saving tax. Anyway, again, thank you, and I look forward to seeing you on the next video.